Why do I do this podcast? Hey folks, it's Kent Lindstrom, partner at 8-Bit Capital. We invest in early stage software companies, and I'm the host of this podcast. And people ask me all the time, why do you do this podcast? I will tell you why I do this podcast. You know, when podcasts first emerged in Silicon Valley, I listened to them and I thought to myself, well, these are not very interesting. This is a lot of people talking about how Series A is the new Series B or whatever. And I thought, I really don't want to hear that. I could probably go find some British guy to tell me that stuff, but I don't want to do that. At the same time, when I'm having a conversation with somebody like Charles Hudson or Cyan Bannister, just at lunch or at coffee, we don't talk about how the Series A is the new B. We talk about really interesting things. And I thought, well, why don't I just bring that to everybody else around the world? Let's just have that conversation. Maybe someone will find it interesting. Maybe someone will find it life-changing in some cases. And so that's how the podcast got started. Now, here we are, 150 episodes later, and I get pitched about 1 billion times a week. You guys seem to like the podcast. I get pitched about 1 billion times a week on having somebody talk about how Series A is the new B still. Or have people talk about the future of e-commerce. And I really don't find that interesting. But there are a lot of people I find interesting. And while I'm getting pitched all the time, I generally just reach out to people who I think are very cool. And a lot of times they say, yeah, I will come on your podcast and we'll have a discussion. So by definition, today's guest, Kobie Fuller, is a cool person. And he really is. You're really going to like this. He is an investor at Upfront Ventures. But there's more to it than that. He's an athlete. By the way, not the first athlete we've had in this podcast. Think Ryan Neese. And I think he has one of the best answers I've heard to how do you support Black founders. It's toward the ends of the episode, and it's definitely not what you expect, and it's definitely worth sticking around for. And the whole thing's great. So, Kobie Fuller is my guest today. By the way, thank you so much. I appreciate you're all listening to me. I only do it a couple times a month, so 8-Bit Capital, remember, I'm a busy guy, but I do appreciate it. And with that, thanks. Here's Kobie Fuller. All right, welcome back. This is the Something Ventured podcast. I am Kent Lindstrom. I'm your host. My guest today, Kobie Fuller. How are you doing?
I'm doing great. How are you?
Thank you so much for doing this. Kobie has a very fancy, very cool, but a very fancy VC resume. Has been at Insight Partners, Accel, and now a partner at Upfront Ventures. We'll explain what that is. Invested in things like user testing and Oculus. But before all that, you were an athlete, and not the first athlete on this podcast, by the way. I've had Ryan Neese on, who played in the NFL.
Yes, good friend.
You did not play in the NFL.
I did not play in the NFL. I did not play a minute of football, maybe in like elementary school PE, but no.
But you did something cool. You did track and so I ran it was a 440 when I did it in high school. You ran track and field.
Yes.
Through college and beyond. Is that right?
That is correct.
That's insane. What were your? No one else will care, but I do. What were your events?
So my events were 400 and 200 main events. And then in high school, I did do the long jump. And so I was pretty good at that. I was able to jump over 22 feet. But yeah, main event were 400 and 200.
Did you ever do the 4x400?
Oh, yeah. Did the 4x4, did the 4x1. The 4x1, we had the Harvard record for a couple decades until it got broken just a few years ago. So yeah, I was definitely in all the relays too.
That's incredible. It's a great event. I did it in high school and then got to college, which was a Big Ten school, so I was not going to run Big Ten track. It turns out. But I have a hypothesis. I think track and field should be a much bigger sport, and soccer shouldn't be as popular as it is. What do you think?
That's funny. Well, I won't throw any shade against soccer, but I do feel like track and field should be a much bigger sport, partially because, like, as long as you're able-bodied, like, everyone has the ability to run.
Yeah.
And if you think about track and field too, it's such a pure sport in terms of what it is. There's a clear winner, a clear loser. There's no subjectivity to it.
Yeah.
And it's also kind of more like a combat sport the way I think about it because you're literally racing against someone. And that competitive dynamic around seeing who is able to actually beat another individual in a physical event
Yeah.
is really exciting. So actually one of my now close friends, Michael Johnson, the Olympian, had a number of world records in the 400 and 200 as well. He's actually trying to change that overall notion around track and field not
Yeah.
being such a mainstream sport. So he started a track league called Grand Slam Track.
Oh,
And the
interesting.
first meet is actually coming up this Friday in Kingston, Jamaica. So it's super exciting. It's the first professional track league that's ever to exist. So it's
That
really exciting. So hopefully it does become bigger than soccer at some point.
Well, it's interesting. It doesn't have to become bigger than soccer, but I had Roger Aaron. Have you ever met Roger Ehrenberg? I had him on recently from IA Ventures, and then one of the most successful venture firms in history. Now he has eBerg Capital, which invests in sports gaming, and related tech. It's all sports. He's a big Michigan guy, but I think he owns like part of the Marlins. It's like that kind of thing,
Yes.
and then owns like kind of part of emerging teams. I don't know if he's in the track game, but it is kind of interesting when you watch it. You see it every few years in the Olympics. You could say, well, it's kind of boring. It's just one race, but in some sense, it's like if you think of golf or NASCAR, you're like, well, it's kind of boring watching a person golf, but you're not watching a person golf. You're watching 40 people golf at the same time. And so track and field, it's like, yeah, okay, it's a long time if you just sit around all day till somebody runs the 400. But if you're watching the 4x400, then there's the pole vault is cool. The people are great looking. Like it's, like the pole vaulters are at least. And I don't know. It should be a bigger sport. That's my that's my
Uh,
take.
not a bad sport.
So so you
I'm fine.
so you come out of it, and so you end up in VC, but you don't fall. The number of people I talk to, it's pretty hard to get a VC job, but the number of people I talk to who are like, oh, I just fell into it, and they fell into it because they went to Stanford, and their roommate was, you heard their dad's name before, kind of thing, right? Do you start out in the entrepreneurial side of things though, don't you?
No, I actually started out, well, I guess.
You ended up somewhere wrapped up in that .com bust, didn't you?
Yeah, so you're right. So I did during the dot-com boom and bust while in college at Harvard. I got exposed to venture capital. It was actually through soccer. It all comes back to soccer, I guess.
Yeah.
It's so a buddy of mine and I had an idea around using the internet to connect soccer players with recruiters that we ended up turning into an online soccer portal that then became one of the highest traffic soccer sites online,
Wow.
raised angel money for it, and then at some point could have sold it for a bunch of money, but we didn't because we're dumb kids. And we're trying to raise a true institutional round, and we're unsuccessful in doing so because around that time, then everything started just going up in flames during kind of 99, 2000 era. And it was during that process, as we were looking to raise true outside capital, I got exposed to this whole world of venture capital and had individuals coming by our office, which was a kind of a dirty house in between Harvard and Central Square and Cambridge. And we're on our best behavior, trying to clean the place up and show all the fancy things we were doing. And then after a number of visits from these VCs, I was like, hell are these guys? These look like they have a
Right.
pretty fun job. Like
Right.
I want to do that. And so ultimately we had to shut down that soccer portal. But then I got obsessed with trying to find a way into the world of venture capital. So I literally wrote physical letters to every Boston-based VC because at the time I was living in Boston. I didn't
Right.
want to leave. And I got maybe one or two replies, physical letters back, and folks just saying, "No way, kid! Like, go get some experience. We don't hire folks just straight out of school." And yeah, I kind of at that point was like, all right, this is not going to be something that happens right now. But I was able to do a year of investment banking and then find my way into my first job at Insight, which the
Right.
job there is cold calling software companies trying to source deals.
Right.
And that's kind of where I started started my career.
Yeah, it used to be a stat. I don't know if it's true anymore, but it's something like, and maybe it's apocryphal, something like there's more Major League Baseball players than venture capitalists, or venture capital jobs or whatever. I don't know. Maybe that's not true anymore.
Maybe not true anymore now. I feel like it was like VCs everywhere.
There's a lot of them. Well, there's fewer maybe this year than the last couple of years. But as you know, from that experience, from those people coming by your office, what like what do you take away from like what did you learn from that experience? Like from kind of not selling, from seeing how people came through and treated you. Like as you kind of look back on it, what's your sense of what that was all about compared to where you are, now and now that you're on the inside of the thing?
Yeah, so long ago. I mean, to me, what was exciting is that this individual, for them, we were just a 10 o'clock meeting on their schedule where they're meeting, founder after founder, and they are going on this journey to find who they should be investing money with and then partnering with to then help them scale that business to the next level. And for me, the idea that my job could be one where I get to meet with so many different founders that are building in so many different industries, and that be a way to learn the whole craft of company building through founders who are, in the ground on the ground floor doing that. I kind of liked that vantage point, and so not
Yeah.
being in the trenches, but being kind of sitting in the cheap seats, but yet still able to help from afar with dollars and expertise and advice. And that was for me like the perfect sort of intersection of entrepreneurship that at the time just resonated to me. And so that
Yeah.
was kind of what I was fascinated about.
Does it tell you anything about selling? There's a dynamic in venture capital where you get to a point, and I've kind of lived through this one a few times, where maybe your company can get acquired for $125 million, for which you will make $17 million, which is a lot of money. And the venture firm's kind of like, well, this is not good for me, but that's a big deal for you. Like, what do you think of that dynamic? Like,
Oh
have you
no,
ever
that's a very real dynamic that I think founders need to keep in mind when they take venture dollars and who they take venture dollars from, because the return profile that certain VCs have, it kind of is different from VC to VC. But there's certain investors where if you're not going to return, I don't know how many multiples on their capital, and it's a north of a billion or even like $10 billion exit, like they don't care. And for you, if an outcome around like $100 million exit is like a grand slam, then like you shouldn't go on a journey with an investor who's optimizing for the billion or $10 billion plus outcome, because there's going to be a misalignment at some point in the future where an acquirer comes across the table and is ready to cash you out. Like that VC is going to say, "Shut up, go back to work." And
right?
so I think certain founders need to realize that if they're not looking to aspire for that type of outcome, they may not really be set up for the product that is venture capital, or that is venture capital for the way certain VCs actually play the game. And that's like a real dynamic that some folks, I don't think really
Yeah.
sometimes take into account.
Yeah, it's we talked because we do seed stage investing, which is pre product market fit almost. And people ask, and one of the things you look for is grit in a founder, that they can just do the crazy thing, which is start a company, which you really shouldn't do. And one of the heuristics we give to people is, one way to think about grit is, would this person, if they're going to build $1 billion or $2 billion company, they're going to get that offer. It like just happens, right? Zuckerberg got the $1 billion offer that everyone wanted him to take. Can you envision that person saying no? Are they so driven by, they're mad at their brother being better at sports, or whatever is driving them? Is it a thing that you think will drive them past that and they'll turn down the $150 million offer? And
Yeah. I think
whether
a lot of it kind of goes to just overall motivation. Like, why are they doing this? Like, what in their journey has brought them to the point where building this company, going on this mission, and what is deemed a successful mission is probably not a bunch of zeros in their bank account, but it's an outcome that is usually them changing the world in some way or capacity that is the only reason why they get up every day trying to do something that is borderline psychotic, which is like
Yep.
company building, and where the odds are pretty much against you. And
Yeah.
so, I look for that that grit and that performance mindset around that you're probably going to fail, but don't fail. Just do what it takes to actually achieve that outcome. And sometimes, most of the time, it doesn't actually work.
Yeah.
Those founders that barrel through all that and make the impossible possible
Yeah.
are the ones that achieve those outcomes. So
It's funny you mentioned the probabilities and people showing up at your office. There was a blog post a long time ago that's lost to time. I can't find it, but somebody wrote about each stage of venture capital of the process of raising money and what the entrepreneur thinks the probability is and what the VC thinks of them getting funded. And so it starts with like you have that first meeting and the the entrepreneur thinks probably 50% we're going to move to the next stage, and the VC is like 10% will move to the next stage. And then you get the next one was you get to the partner meeting, and like you know the entrepreneur is like, oh, it's 80% I'm going to get it, and the VC is like, nah, it's 50% at the partner meeting. And then finally you get to the punchline, you get to the term sheet, and you're like 100% if you're the entrepreneur. The VC is like 80%. Kind of on down the path.
that's funny. But I do feel like there's some moments though where again, there's these deals now that a lot of us inventors are seeing where you're that VC chasing after the hot deal, put their term sheet down, like, oh, this is gonna be like 100%, and the entrepreneur's like,
Yeah.
probably 10.
Yeah. Well,
But
I've talked to, I think, Roloff at Sequoia, who says it's like, no, 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 please. Right. You're like, you don't want all the things you don't want, then you just can't get into the thing you do want.
totally.
So you're at Insight, you've made it into venture capital. Congratulations. That ends up not be like, it seems like it's a great place to start, but you still have more. You move on to Accel at some point from that, right?
Yeah, well, actually, there's a couple pit stops along the way. So, a few of us, we actually broke off from Insight. We started a platform called OpenView,
That's
and
right.
so I was one of the founders at OpenView. This was back in 2005, where we raised a first fund that was $107 million, and then a second fund that was slight bit north of that. I actually then left OpenView to be an operator where for 2 years I pretty much like packed my bags, moved from Boston to LA, dragged my wife kicking and screaming from the Northeast, and found myself in the world of women's fashion where I was the CMO of Revolve.
Oh, wow.
Yeah, so for a couple of years, I was in the trenches selling women's clothes
Yeah.
and doing that with actually no practical marketing experience. A lot of what I was doing was investing in marketing technology. So one of my early lucky wins when I was at Insight was Exact Target that Salesforce acquired for a few $1 billion, and
Good
that
for
kind
you.
of had me kept pulling on this thread of marketing automation and digital transformation in the CMO suite. But yeah, I was selling women's clothes
Yeah.
for
That's and so how do you get back out? Okay, now you got a perfectly good career in marketing women's clothes. I hear people buy a lot of those. How do you
by
how
a
do you
lot.
get back into the VC world?
Yeah, so I got Revolve in 2 years from a little less than $20 million run rate to a couple hundred million with no outside capital. And
Wow.
then I realized that it's not my life's calling throw um, to throw rager parties at Coachella and beg people to post pictures on Instagram in exchange for free clothes, which that's essentially what we started really doing in the 2012, 2013 timeframe because Instagram started becoming a real platform around that time. So it was
Yeah.
a perfect timing me being there and being able to architect a lot of what is now kind of like modern influencer marketing. But I realized that like that was going to be my life
Yeah.
versus a lot of other things I was doing. And so I was realizing that after TSG, consumer focused private equity fund came in to put some capital on the balance sheet, it was no longer a bootstrap business. That maybe it's my time to exit stage left and go back to what my true calling was, which is venture. Because if I go back to why I was so excited about the role of VC when I was exposed to it in college was that I realized it was being able to, again, sit from the cheap seats, helping multiple different founders and be a part of multiple different journeys at one point in time. And at Revolve, I was spending all my time in one venture, and it got incredibly boring to me. And I
Yeah.
realized that really VC long term was where I wanted to spend my final years. And I'd say it was a tough decision though, because at the time I was at a crossroads. I could have had the fortunate opportunity to either go to Accel, or my buddy at the time was starting Oculus.
Oh,
And
yeah.
so I was pretty much looking at joining Oculus at the ground floor as CMO. But then I realized that, yeah, these crazy goggles, I don't know, this is kind of wacky and out there. And so that's kind of why I personally invested Oculus, because I was too stupid and I didn't actually join the team.
Yeah.
That's
Yeah.
that.
I think joining Oculus might have been the correct one. Although I got to say, for every one of those, somebody joined, Schmoculus or whatever, and you never heard of it. So yeah, in retrospect, of course,
Yeah.
that's the right answer.
Yeah.
And so, what do you make of what happened? I'm just curious what you think. It was such a big thing. I had Cyan Bannister on recently. She talked about how excited she is about sort of ambient things like Oculus and AR and VR. Hasn't quite done the thing we thought it would do yet, though. Is it still coming, or did we miss something, or
It very much is still coming. I think people assumed it was going to come a lot faster than it really did.
yeah,
And part of that was the form factor. The early Oculus Quests just clunky and really hard to um, boot up and get to the content you want. Peripherals are kind of a mess. The field of view and the actual resolution not as high as it was. You get to where we are right now, and you have these the Quest and others with mixed reality capabilities, far more lightweight, and a developer ecosystem that's spending more time building content on there. We're still not quite there yet, clearly, but the sales of the Quest continue to actually increase. Will they be as dominant as the smartphone? No, I think it's gonna be a long
right,
time before we see it get to that point. But I think it's still a pretty interesting platform that has a lot of different use cases to it that people find quite valuable, whether it's gaming or different sort of productivity tools or even commercial applications. And I'm still bullish long term, but it's not where I'm spending all my time sourcing, if I'm being transparent.
yeah. And so, well, how do you end up at Upfront then? This is kind of Upfront is there's a couple interesting things about Upfront. Well, probably more than this, but one, they're in LA,
Yes.
not San Francisco. You're in LA, and have a really like there's a zillion events that everyone has, but Upfront has a pretty famous event, right? Like its yearly events, like kind of cooler than the other events. If I get that right,
Yeah.
like a couple celebrities show up, everybody wants to go. It's pretty cool.
Yeah, no, that's cool. That's cool. Sorry, there's some background noise. I was trying to mitigate that. So, yeah, so how I got to Upfront, I co-invested with Upfront on my first two investments while I was at Accel.
Yeah,
So it was Invoca, which was my first investment I made at Accel, a Santa Barbara-based marketing automation platform. That's how I got to first meet my now partner, Mark. And then second investment was Osmo, which is a kids augmented reality gaming platform, which I actually met at the Upfront Summit, which Mark had me speak at, and was able to go and preempt their Series A. And so very quickly into my time at Accel, I found myself on two boards with my now partner, Mark.
yeah,
And I was speaking at, I think, almost every Upfront Summit that was held while I was actually working at Accel.
yeah,
And it was through that natural experience, just working with Mark and getting uh, integrated just organically with some of the team here at Upfront, that it just became this logical fit when there was just a an opening over here at the firm to transition, back down to LA and
yeah,
be a part of the team. And it was a lot of just Mark and I excited to work together and be partners, even though we were kind of already partnering up on these portfolio companies, but was actually trying to find a way to work more closely together. So it was an organic transition where I wasn't looking to leave Excel, but just
yeah.
found it was a logical place to really make write the next chapter of my career.
That's cool. I know you invest everywhere, anywhere that there's a huge opportunity. But do you think in terms of there being like an LA startup scene?
Yes, that 1,000% is a very vibrant LA startup scene. And one of the areas where we're seeing most of the excitement now is the world of hard tech, aerospace, and defense. My partner, Nick, spends a lot of time in around that community. The number of founders that are spinning off of platforms like SpaceX or Anduril and others, there's constantly seeing new amazing companies that are being formed. And so we're seeing a really huge sort of just energy here and around the hard tech community, which is great.
Yeah. You guys have the like a SpaceX or not a SpaceX base, but like a rockets taking off down there. I think somewhere. I forget where. I had somebody from SpaceX on recently, and I think they lived in Culver City or something. Like, yeah, we can see the rockets taking off from whatever the heck the Air Force base is. I'm like,
Yeah,
well, that's pretty cool. Take your kids out to the backyard and watch that. Like that's pretty neat.
That's fun. It's fun being down here in LA. It's not bad. It's not bad. It's not all this a bunch of movie stars and all that. We're
Yeah.
actually doing some hard work.
The people are better looking, but I grew up in San Diego, so I get it. You have to be careful. Like, yeah, it gets pretty nice in San Diego. A couple years can go by, and all of a sudden you're, you know, waiting for the insurance settlement and surfing every day kind of thing. Okay. Also, Qualcomm was started in San Diego, so you know anything could happen. So I wanted to ask you whether when I started this podcast, and it was 8, 9, 10 years ago. I had on guys like Nnamdi Okike, Charles Hudson, Adia Zhao, Ryan Neese. And I was kind of curious about black founders in I call it Silicon Valley, but in startups. And there's always kind of been a thing where there have just been fewer than there should be. And I was curious, like, they had all kinds of different ideas about it, and I'm just curious what your ideas about it. Like, whither the black founders, and what are you doing about it? Are we where we need to be, or what's going on there?
Yeah, by the way, I got to shout out my very close friend Namdi, which you have on the platform. So Namdi was part of the reason why I even joined Insight. So we went to Harvard together,
Oh
ran
wow.
track together. He's godfather of one of my sons. We're very, very close friends. So
Oh great.
yeah, it'd be remiss if I didn't mention Sir Namdi, who went to Insight first, and then I went after. And so
Oh,
that's
that's great.
some of the story there. And yeah, with regards to the number of Black founders that are or lack thereof, it's been pretty underwhelming statistic that we've seen in terms of number of folks that are actually going out, being able to raise capital and go and start companies. I'm hopeful and optimistic that can and will change over time. I think part of it is there needs to be more allocators that are from the community that find ways to actually get capital into the hands of founders that look like us. But beyond that, there needs to be also a notion of just being able to put biases sort of aside. And a part of this, people sometimes, unfortunately, naturally invest in their own communities and their own sort of pockets. It's being able to get outside of your own community and find ways to find innovation in other types of founders and folks that are building besides just your immediate network. And so
Yeah.
things I've tried to do to help in that regard, a number of years ago, I started a platform called Valence that was oriented around trying to combat this. It was a professional community for Black professionals, and we peaked at getting close to 30,000 Black professionals on the
Wow.
platform. Raised a Series A from GGV and my good friend Hans Tung to go off and scale this initiative, and ended up exiting and selling to my friend Paul Judge platforms called Greenwood. And it's platforms and initiatives like that where, in my opinion, is trying to create better net mechanisms for folks who don't have an ability to tap into the Black community to more easily do so and be able to fund those opportunities that are there, and also create a bridge for those Black founders to access capital and the innovation economy in a way they haven't been able to do before. And so I'm hopeful and optimistic the stats will change. There are definitely forces at play that are not helping with regard to
Right.
that, which
Right.
we'll leave for another conversation in
Yeah.
terms of what we're seeing in terms of just D and I having just headwinds against it.
Yeah.
And so, but I still have hope and optimism around what's being able to find a way for more Black founders to be able to get the capital they need to actually start the businesses they need.
There's a couple of things people said to me. Charles Hudson said, so like, as Charles Hudson often does, kind of woke me up on this one where I was was like, kind of, are people really biased like against black? Like if some great black founder with a security company came along, would like Sequoia just doesn't do it? And he said something like, he's like, look, most people in Silicon Valley know a lot of women. They might be married to a woman, but they might not just not know a couple black guys. And it's that like that. It's not that they're seeing things and saying no. It's just that they're kind of not seeing the thing. Um, was how Charles kind of put it to me, and he kind of suggested, be open. If somebody in Silicon Valley can't get to you, it's probably a pretty bad sign, right? If they can't figure out how to network their way to you, to get an intro. But he's like, if somebody from Tennessee State tries to reach out to you, take the cold email. Because like, why would they know how to get to you? They're at Tennessee State. Like they might be great, but they just didn't happen to go to Stanford. I just thought that was kind of a, I don't know, interesting insight from Charles.
Yeah, I think it goes back to people's networks, and if your network is naturally designed and organized in a way where it kind of mimics your life's journey, and if you haven't interacted or been around many people from outside your own community, then for you to think that one day you're going to wake up and be able to tap into black founders or black founders be able to tap into you, it's not going to happen. And
Yeah,
so it needs to be intentionality around how you're sourcing, just as intentionality around how, individuals source for the next hottest AI deal. If you really truly intentionally want to invest in the black community, invest in black founders, then it's really making sure that you're spending time in the areas where those founders exist. But I also want to be clear, like black founders are building some incredibly hot AI companies. It's not like it's mutually exclusive. And so
right.
there's lots of founders I reach out to cold on LinkedIn that are some hotshot kids that look like me or coming out of the top universities, and they're not replying back to my emails because they're too busy building their companies, and they're like, I don't want to talk to these bozo VCs. So it's not like I want to make sure people realize it's not a world where like black founders or all of them are trying to like find a handout anyone to help me. There are some incredible black founders that are not talking to VCs, are killing it and doing fine.
Yeah.
And that is a lot of the world that I think people need to also realize this exists.
It's just, yeah, same thing. No, 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 please. Like, hey, like I want in. What? Let me, a couple final things I want to ask you. Like, we're kind of in a pretty specific time in venture capital. I'm curious what you think about. I'll ask about AI in a second, but what do you think about the venture capital world now? We had kind of profusion of firms emerge. I mean, you're, at a top elite firm there, but a bunch of seed firms emerged. It is kind of an interesting phenomenon. There haven't been exits for a little while. What do the big guys are all fighting over politics. Vinode's firing at Mark of the Gods up on the mountains are angry at each other. What the heck is going on in venture capital? As
Oh
a
no,
longtime observer.
it's it's a very interesting time. Well, first off, I think it's a great time to be in the game
Yeah,
because these founders that are out here, the things that are being built, the intelligence that I'm seeing, it's awesome. It makes the job incredibly exciting and challenging every day because trying to keep up with these kids that are building these just groundbreaking pieces of tech it makes the job just rewarding. The regards to the amount of dollars that are out there chasing these deals, it's insane.
yeah,
Rewind back to 2003, 2004 when I was doing this job. Like be a VC, that wasn't cool. There wasn't like tons of us running around.
right.
Now you think about what it means to be a VC. Like I said, like there's probably more VCs than there are professional athletes, whatever you said. Maybe it's exaggeration, but there's a lot of us.
Yeah,
And I think when you had happened during kind of 2020, 2021, when there was an explosion of capital to actually enter into the asset class, people thought it was like shooting fish in a barrel, unicorns being minted left and right, and there was an illusion of value and wealth creation to the point where like I had folks I knew saying like, "Oh yeah, I'm gonna retire to being a VC," or like, "Oh, VC's my side gig." Like that's
yeah,
easy stuff. And I'm like, "Wow, your
yeah,
side hustle's my main hustle." Like
yeah,
that's what's happening right now. And what is now occurred is a lot of those folks, they're going to have a very tough time or had a tough time raising their next fund. And so there's a washout of those folks. There's a washout of partners that thought the job was so easy and they realized, oh, this is hard work. what's this thing? A pay to play? Down?
Yeah.
Like my founders are coming after me because of like this whole thing called the pref stack that's weighing them down. I didn't think that was a big deal. All of these
Right.
dynamics that are just becoming very unpleasant to folks where they're realizing it's like, this is not fun. Wait, how long is it going to take for me to get a carry check?
Yep.
Oh, like a decade? I'm good. And then so there's a natural then flushing out of folks that and a healthy flushing out, in my opinion, from folks that actually like they don't enjoy the craft of
Right.
venture. Like to me, this is a sport. It's a very hard sport, uh, but I love it, and that's what gets me up every day to do the job. Is that I just enjoy what I'm doing, and it's not because of like the money I could be making. It's like it's truly, in my opinion, like an absolutely fun, rewarding, but challenging, incredibly stressful job.
Yeah.
And those folks that actually take it with that mindset, I think will thrive in this next period. That's going to
Yeah.
be incredibly challenging and rewarding with regards to new dollars going out the door in these new companies. And for those folks that are up for the task, that
Yeah.
they can choose to find something else that's better suited for their time, which I think is fine and is healthy.
Yeah, that's really well said. I talked to somebody recently. I was like, these people are having, tough time raising their second fund. And he was like, a lot of them aren't having a tough time raising their second fund. They've decided not to because they came in thinking this was like a fun, easy job. And I will never complain about being a venture capitalist. But it's a very hard, grinding job if you do it well. And they were like, oh, this isn't like fly around on the jet, and make $1 billion in a month. It's a lot of detailed work and failure and so that they're just like, yeah, maybe being the biz dev guy at a hot company isn't such a bad gig after all at this point.
I mean, there's a lot of emotions that you also are working with, whether it's your own emotions,
That's
your
right.
partner's emotions, your founder's emotions, most importantly, because they're going on these journeys. And if you have a large enough portfolio as you start building up your book, at any given point in time, there's something you're dealing with. And if you're not emotionally grounded and stable to be there for your founders, helping them through whatever they're dealing with, then in my opinion, you're not doing your job as a VC. And
Yeah.
that's what I love doing is playing that role as a coach and taking a neutral mindset around how can I optimize the mental performance of the founders I work with, the founders in our portfolio, in a manner where they can bring their best selves to their companies, to their teams, and ultimately be best optimized for success. And if it ultimately doesn't end up being a multi-billion dollar outcome, like that's fine.
Right.
Like it's not a matter of life and death. That's okay. Like this is just the way the game works and the way the loss ratio plays out.
Yeah, it's crazy. You have 30 companies. Any given day, somebody can call up and say, hey, things are going wrong. We're shutting down. And somebody can call up and say, hey, guess what? We just landed a big client in a Series A, and you never know which day it's going to be.
Never know which day it's going to be. One day your company that was once considered a dog is now high flying, and your one high flying company is then now like not doing so well, and that's why you just never know.
Man, we have had all of those. So let me finish on this. I mean, we're in an extraordinary time. I think there have been these things, the internet emerging. I mean, it was a little before, when I was investing or working, but then mobile emerging. Now, you have these moments where something emerges and everything changes. It seems like AI is one of those times. What do you make of AI, the dark side of AI, the upside of AI? What do you think?
Well, I don't
Uh,
want to talk about the dark side of AI because we could get this really dystopian. And
People love that stuff. It's good
oh,
radio.
it's good. It's
I'm
not.
telling you.
Well, it's so funny. On the dystopian front, the only thing I'll mention is it's funny, quick story. So I have two boys. One's 9, one's 7. So 2 weeks ago, there was a morning gathering they had for the parents of the class where they're showcasing essays they wrote. And so I show up to my son's class and he brings me over and is like, I want to show you my essay. I'm like, oh, cool, great. And I look down. The title of the essay is I Hate Robots. And I'm like, what is this? And it's basically this, yeah, like long essay around how he hates AI, how it's going to basically be destructive to humanity. He has an example, which is an exaggeration, by the way, of us being in a Waymo. during his birthday last summer, and it kind of driving haphazardly and almost like running us off into the ocean. And I was
Right.
like, what are you talking about? But for some reason, us being a self-driving car, he did not like. And he also talks about the fact, like, hey, if you're at a pool party and like a robot's invited, you can't throw the robot into the pool. It'll glitch, and that's not fun. And it was fascinating to just hear the vantage point of a 9-year-old just really not being super excited about AI because it was taking away some of the fundamental things that we as humans should be prioritizing and really just engaging on a day-to-day basis. And so that's at least one thing I think we need to be mindful of with regards to AI is what it can do in terms of stripping us of our humanity and connection with one another and just blindly trusting it to do things. The thing that gives me hope and excitement and why I'm incredibly bullish on AI is that I do think it can fundamentally can make us better at certain things and give us superhuman powers. And if we look at AI as a layer of assistance and augmentation, whether it's on a personal basis, and I have some portfolio companies that are doing that, or even on a professional basis, and some we're portfolio companies, both of ours, in OneUp,
Yep.
which is streamlining the process of completing RFPs, which is a long couple week process that you go through during sales cycles that the company is streamlining down to 2 minutes. Like salespeople don't want to spend a couple weeks filling out RFPs,
Right.
which is just going out and collecting information, bothering SEs to help them just respond to a prospect. Like now you can like snap your finger and be able to use their knowledge system coupled with AI to just have you do your job in like warp speed.
Right.
Like that type of application exists in so many different iterations across departments, industries, you name it. And for me, it is the most exciting time period to be investing in enterprise software. And we'll start seeing more and more consumer applications that also give me excitement.
Yeah. It is incredible. I mean, it's always been the case that, people build these companies like, oh, it's a little bit better. My thing's better than Salesforce. It's like, yeah, nobody wants better than Salesforce. They want it either costs 1/10 as, it's like the dating app, right? It's like you need to go on and spend no time and meet like a supermodel who becomes your wife in one move. Like that's what you need. It needs to be that. And these applications with AI are that, where it's like, no, this thing does 1/10, cuts your time 90%, which those are gonna be big companies.
Yeah, and the biggest thing it creates incredible outcomes. The outcomes that some of these applications are driving are insane. We have one company called Laurel that's in the category of kind of timekeeping, AI timekeeping with an even bigger vision of that. But they're able with their desktop agent find for the average service worker who needs to bill for their time an incremental 30 minutes per week per service worker of billable time that can be completely audited once you actually give it to the end client. You can do the math against that in terms of what that drives in terms of incremental revenue for the services organization. It's like staggering.
Yeah.
It's like instant money. And so it's things like that that are super exciting.
What a great time. What a great time to be in venture. This has been great. How do people, if they want to find you or follow you or hear what you have to say, what's the best way to find you?
Yeah, they can just find me on LinkedIn. That's probably the easiest way to connect with me, or they can just like send me an email, honestly. Just Kobie at Upfront. I'm pretty responsive to most emails. I mean, it's funny. Mentioned OneUp. Georgia OneUp cold emailed me, and that's how we started talking, and now he's a portfolio company. So I respond to email.
That's fantastic. Thanks so much for doing this.
Yeah, thank you. Thanks for having me.
All right, this has been the Something Investor podcast. My guest, Kobie Fuller. Kobie Fuller. Talk to you next time.